tankers in this game. Your business, I read the notes this morning. I mean, you are literally, excuse the pun, cranking on gas.
Well, that's one.
On oil and petroleum.
And other chemicals.
On refined products.
On refined products.
Correct.
A whole host. But it's good for you.
Absolutely. I mean, since the tankers are actually benefiting hugely from this drop in oil price, and that's really been the case for the past few months. And actually now charter rates for all tankers are at levels that we haven't seen since the last boom in 2008. And that's really thanks to the demand that's being created by the drop in oil price.
And how sustainable is that situation? Who are the customers? Who is it that's paying these high levels? And in the current environment, when oil prices are dropping, is that going to be sustainable that you're cooking on gas? Or
well, it's very much it's a pure market. It's driven by supply and demand, and so when there's when demand exceeds supply, rates go vertical. And when the opposite happens, they drop quite rapidly. So we're in a phase now, because of this increase in demand, this layer of demand that's been placed on the tanker market, rates have literally gone vertical. And as I said, they're at levels now that we haven't seen in 7 years.
But is it oil companies that are paying this? The companies that extract the stuff that pay to move it around the world?
Yeah, in our business, it's oil traders for the most part, right? So they're looking to make a spread on their buy and sell. Okay, and so what's happening in particular in the product tanker sector, which we're engaged in, is that regional price differentials that have emerged from this dramatic drop in the price of oil has resulted in very long haul trading opportunities and generally more trading activity, and so that's really spurred a lot of demand for tankers.
And we have a steep oil futures curve, don't we, Tony, which of course is called contango, not a word I get to use every day.
It's not a Latin American dance either.
Is it going to encourage floating storage for the carry trade? Will we see more and more tankers floating out there
with
stuffed with oil?
Stuffed with oil.
Explain to our viewer why this is important.
Okay, well, I think that's very important for VLCCs or super tankers, the very biggest crude tankers, because those ships could soon enter directly into contracts to store oil for that specific reason, because you can basically put the oil on the ship, pay the freight, pay the interest, the carry cost of the oil, and still make money on the basis of covering with futures. In our business, floating storage also takes place, but it's a little less direct. There's a lot of oil floating around in terms of refined products, which has actually not been bought yet. So it's generally heading in the direction of where it will be bought.
Give us a sense of where these tankers are. They're just loads of tankers floating around the world that are
offshore waiting for a destination.
Yeah, exactly.
That's right. Okay, so broadly speaking, if you look at the bigger ship sizes, they're on fairly established routes. But if you look at our sector, which is mostly medium-sized product tankers, they're like yellow cabs in New York City. They're just everywhere. Okay? And so if you have a parade downtown or some congestion somewhere, it all gets messed up. And the advantage that we have, unlike cabs, is that we can raise our rates on the spot when somebody comes up and tries to grab a ship.
You are very bullish. You've got 14 tankers in use at the moment. You've got another 10 they're called eco-design vessels on order. I mean, this is bullishness. This is a CEO who's looking at his marketplace and really quite upbeat. Now, what's the possibility? Because the world was caught off guard last year by the dramatic drop. What's the possibility that we're in this peak situation, that oil recovers? I mean, do you see a recovery? Are you overly ambitious with this growth plan?
Very good question. This plan was put into place when we did our IPO 18 months ago. At that point, we ordered the 10 ships that are coming on. Actually, the first one just delivered yesterday. So these ships are coming on very rapidly now, and I think our timing has turned out to be perfect. I don't think we foresaw this, obviously, 18 months ago, but we're very pleased with the fact that our fleet is growing by 70% over the next 9 months. Now, the question is, will the demand still be there when all the ships deliver? So I think if you believe that the oil glut is going to be around for quite a while, and that we're possibly entering into a new phase of the oil market where pure market forces are determining the price, not geopolitical events, or which is also good for shipping, or particularly an oil cartel, cartel pricing, then we should be in a phase where there's surplus oil, a lot of price volatility, generally low-priced oil, and that's obviously all going to create demand for tankers.
So what kind of visibility do you have on that glut then? So when you look at what's happening in the US and the shale industry, when you look at what OPEC are doing and the levels that we're seeing being pumped at the moment, how far forward can you look and say we're confident that's going to continue?
Yeah, well, I don't have any greater sense of that than anyone else, but I think common sense would dictate that it's only the market that's going to have an impact on shale oil production. Most of the OPEC countries appear to be unwilling or unable to cut, and the big player Saudi Arabia has just said they're not going to save the world this time. And so we could be in a phase like we were in 1986, when Saudi Arabia opened the spigot, collapsed the price of oil, and then actually from 1986, that ended up in a very strong run for the tanker business for 5 years, where tanker demand grew an average of 6% for those 5 years.
Where's equilibrium? I know it's a tough one, Tony, for the price of oil. As Brent crude inches below $50 a barrel, US oil already below $50 a barrel.
Yeah.
Where do you think equilibrium is?
I'm not sure. That's a very good question. Again, I don't have any more information than anyone else, but are we really in a phase of seeking equilibrium, or is there going to be continued volatility in the price of oil? So it might bounce between, say, 45 and 75 or 80. And under those conditions, that just creates a tremendous amount of oil trading activity and demand for our ships. So in terms of what it means for us, we believe that even if it's relatively low, it'll be bouncing around quite a bit in percent terms, and that'll create a lot of opportunity.